Welcome, Nick from Rateseeker. Thank you for joining Kelly and I on the couch for our, is it fifth podcast?
Fifth.
Lucky number 5.
Amazing.
So appreciate you coming here and joining us today. So what we would love to hear from you today for our audience is basically, what is the role of a broker and why are you so important to the client in the buying process?
Well, that's a really good question because we get a lot of people asking whether they should go direct to the bank or use a mortgage broker. So I think a better way to kind of look at that is to ask, well, what does a broker do?
Yeah.
And what sort of value did it actually bring in terms of the whole lending process? Now, mortgage brokers, just kind of start from scratch. Very simply put, we are a conduit between the borrower and the lender. So in other words, we kind of assist matching the client or the borrower with the bank. So where we differentiate ourselves from your typical going direct to the bank is that we have access to over 35 different lenders. So what does that actually even mean? It means that you'll be exposed to not only your mainstream lenders like your CBA, Westpac, St. George that you have heard of, you are also being exposed to other tier 2 lenders like Macquarie Bank, ING, and to a certain degree non-bank lenders as well that could potentially give you a better outcome. So the short version of why people generally go to brokers is not only because we provide with more options, but it's also because we provide the right lending solution for you. In other words, we're taking the guesswork out of what's right, what's the right fit for you in terms of your home loan.
Do you mind just explaining to those that don't quite understand the difference between what a tier 1, tier 2 lender is?
Well, we label it tier 1, tier 2 because tier 1 for us means that it's your typical major banks.
Yeah.
You know, your CBA, Westpac, St. George. Tier 2 banks are banks that have generally doesn't have that lot of exposure, like Macquarie Bank, for example, ING, Suncorp. Some people may have heard of it because the whole broking industry is now a little bit more prominent, which means that people are starting to kind of engage us and they're starting to have an understanding that, hey, the entire finance is not restricted to the major banks.
And why do you think that is, that there is a huge driver now towards engaging a mortgage broker to organise finance?
Kind of circle back to what I was saying,
Yeah.
because we do provide more options.
Okay.
And the thing here is that if you go to a broker, they not only save you time, again, we'll do all the legwork, everything from start to finish, which more than likely will give you a much better outcome in terms of how much, for example, where there's a nuance between different lenders with their policy simply means that you have different rates, you have different borrowing capacity. So if you go to a broker, we should be able to work all that out for you guys, or for the borrower, basically.
And when you meet with a client for the first time and they come to you and they say, we want to either upsize, downsize, potentially purchase their first home, do you focus on structure as much as rate? Because a lot of people go, they just want to get the lowest possible rate, which might not necessarily be the right thing for their long-term strategy. Do you have that initial conversation with them?
Yeah, look, I love that question.
Yeah.
One of the key reasons why that's actually a really good question is because being brokers is not about just matching bank to borrower.
Yeah.
Being a broker or an advisor in particular is to firstly get a feel for the client situation. And part and parcel of really putting together a strategy is to understand that journey. What are they doing? Are they looking at buying as a first home? Are they looking at building a property portfolio? How much savings do we need to deploy to make sure that I have enough deposit for the next purchase? So it's not as shallow as just going, hey, this is the best possible rate, but more so having a better understanding that just because the rate is better doesn't mean it gives you a better outcome. Because again, going back to what I was saying, different lenders have a different policy. There's a nuance with it. So it's a matter about finding the right strategy in place first, and then we'll then use the lenders as a means to an end, as part of a strategy, as opposed to be focusing on the rates itself.
Yeah.
A lot of our clients that really benefit from, and the feedback that we get, it's never about the rate. It's almost never about a rate, but it's always a forefront of what we do. As mortgage brokers, we always want to get the best possible rate.
Yep.
But the difference here is that the client actually gets an immense amount of value if they have the right strategy in place to implement.
What makes a broker more desirable than others? Is it cultural fit? Is it purely relationship with banks? Is it that you understand policies better? What makes you so special out there?
I'm a really special broker. So, look, just so that way I frame the questions correctly,
Yeah.
that we're on the same
Yeah.
page. Are you actually asking me what
Why do people use you?
it, the most important part here is to understand how do you actually vet or qualify a broker.
Yeah.
You know, just like any sort of relationships, you need to go through the whole song and dance. And what I mean by that is you need to get to know whether the broker is the right fit for you. And fundamentally, I can probably break this down into two parts. The way we encourage clients to firstly look at this is that to understand the importance of finding the right broker first and foremost. And one of the reasons why we push for that is because as part of the application process, you will be providing us with an immense amount of personal details. And what I mean by that is from your name, date of birth, to your income, assets, liabilities, and your expenses. So in short, we could potentially know more about you than yourself, right? And that's what we get a lot from a lot of our clients. So then the next thing is that, well, how do we know whether the broker is right for you? Drawing back to what I was saying, we generally look at, or we always tell our clients to go, look, you need to look at two things. The way I break it down is the quantitative and the qualitative. So what is the quantitative? So quantitative are things that are measurable. So if you were to be referred by a friend, that's already a good start, right? Referred by a family, etc. But to take this one thing further, you want to kind of check in there, do they have any sort of online footprint? Do they have any sort of Google reviews? If you know who the broker is, it's not a bad idea to kind of jump in on LinkedIn and see what are your credentials. You need to make sure that at a very technical level, they're qualified to give you the advice. Then also coupled with the experience that they have, then it will give you some comfort that these guys actually know what they're doing. Right? Unfortunately, in our industry, it is quite a saturated market. So it's important for you to kind of filter and weed out which one would actually work best for you, which then leads into the qualitative side of vetting or qualification. You know, when we talk about qualitative assessment or vetting process, this is where you need to have the conversation with your broker. Does the broker actually understand you? Can they articulate certain concepts to make you feel that you actually know what the next steps are? A lot of times when, again, when we speak to clients that come on board, they tend to get a little bit confused of the entire process because people tend to throw a lot of legal jargons or finance jargons, whatever it is. And they come out of the conversation not knowing, okay, well, what's the next step? Whereas if you go to an advisor, they should be able to kind of break everything down. Firstly, seek to understand where you guys are at. What is that you're looking at achieving? Going back to the whole understanding the journey piece, once you kind of get a really intimate understanding of what they're looking at doing, then they'll be able to kind of guide you, go, okay, well, this is how we can help. Yeah. This is the steps that we're going to take. So if you were to combine both the quant and the qualitative together, it does give you a much better outcome in terms of selecting which broker is right for you. And I'm only saying this is because that's exactly what we do.
Yeah. And I can attest to that because one of our clients that we worked with together, his feedback was that you were very detailed, and he liked that when he left the meeting, well, no, actually, when he's in the meeting, you could tell his mind was ticking, but you recognize that his mind was ticking, was able to go, hey, you look a little bit confused. Where can I clarify? And he was impressed that you, one, identified it, and two, was able to assure him. So he walked out knowing where his situation was. So it's great that I can personally say the journey for our clients is always a successful one, and yeah, you do really well with that.
I mean, just to build on that as well, aside from just being able to kind of give the confidence that we know what we're doing, is that the entire broking model, I believe anyway, should be predicated or centered or focused on creating a long-term relationship with your clients. You know, that way you can provide them with the right service. And if you are able to do that successfully, yeah, the client will always be better off, because if you keep the finger on the pulse with where they're at all times, making sure that they understand where they are, then the client will almost always come up better on top and stay ahead of the banks. So yes, thank you for the positive feedback and experience from the clients. But that's exactly what brokers do. It's what they're supposed to be doing, to be able to kind of walk the client's hand from start to finish, especially in the buying journey. Like, you guys can probably attest to that too. It's buying a property is probably the biggest financial decision to ever make.
Absolutely.
They can get into hundreds of thousands, to certain clients, millions of dollars in debt.
Yeah.
So having the right team in place, like a good buyer's agent like yourself, mortgage broking and financial planning, if you have that centered around the clients, it's almost, if we work collaboratively, the synergies are there.
100%.
So for us, it just makes the most sense, and being detailed is definitely one, and I'm sure we got some good feedback from you guys as well. Yeah.
I think as well, like the biggest thing for us, we are a service at the end of the day, and communication is key to success. And we're very big on daily check-ins with our clients, regular checkpoints to let them know where we're at in that buying journey, so that they have comfort and peace of mind to know that we're working really hard for them in the background to get them a result.
Yeah.
And I think, just based on the feedback we've received from clients, mutual clients,
Yeah.
is that your communication is far superior.
Oh, thank you.
And that's a testament to how successful your business is and the model.
And I
So
think that's why it's good to kind of work as a collaboratively.
yeah,
Because I feel that's, for someone that's buying the first property, or even looking at growing a property portfolio, they need to find the right professionals. I'm great with debt. I'm great with lending. I know the ins and outs of it, but also on the same token, for them to really grow their portfolio in the right way, is to have the right advice for, selecting the right property too. So growing a property at times is not just about finding the right home loan, but it's also finding the right property. But if you combine those two together, the client will almost again get a much better outcome than that,
yeah.
than if they were to do it on their own. And that's what we found as well.
Now, the crystal ball question that we get asked every day. No, you probably know what's coming.
Oh God. Okay, let's go.
What is going to happen with interest rates?
Oh, okay. So
Yeah, you will be held liable to this.
Disclaimer.
Yeah, disclaimer. No.
It's a really funny question, because it is a crystal ball question first and foremost, but what we need to firstly understand is, how does the Reserve Bank, RBA, in short, operate, and the metrics that they use to kind of determine whether they're going to cut rates or increase rates comes down to the economic data, like inflation rate, unemployment rate, but the main concern is obviously inflation. So what we've seen in the last couple of months, just a quick update for everyone, is that inflation's now starting to be a bit more in control, which is why there are talks on the table that there might be a rate reduction in the horizon. In terms of when, nobody knows. But one thing I do put a word of caution out there is that even though they do reduce the rates, it may not be the same magnitude as they did when they were increasing the rates. So in other words, if they decide to kind of cut the rates by 0.5, they may just cut it by 0.5 or 0.25, and you just hold and wait and see what happens. So there's a lot of times when I was speaking to clients, they're coming back and saying, I can't wait for the rate to reduce, naturally. But they're also under the assumption that it's going to reduce as quickly as it went up. And that's actually not true, because again, it comes down to what the data the RBA actually receives before they actually make the decision on that. So in answering your crystal ball question, it's coming, it's round the corner, I just don't know when.
Yeah, no, I appreciate your insight. And it's a hard question, because no one knows, and anyone that pretends that they know are lying to you. Like, it's with anything, is the market going to go up? Is it going to go down? You just don't know. You can only really deal with I guess, what you're seeing in terms of current market conditions, and then how that is going to snowball forward, if that makes sense.
Absolutely. Funny you should say that, because during the times, especially coming out of COVID, the governor of RBA was saying that they're not going to increase rates till 2024, 2025. And then as we kind of approach closer, they started to kind of change their expectation of when are you going to increase the rates. And lo and behold, it actually increased the rates a lot faster to a point where, you know, they have to come out and say, look, you know what, we should not have given that sort of expectation, because the general market or buyers or borrowers in general would rely on that sort of information, especially coming from the RBA.
Absolutely.
You know, and they're saying that, look, I'm going to buy, get myself into more debt because, you know what, the rates are not going to increase till 2024. And this is going back to 2020, right? When there's all this chatter talking about, look, the rates are going to stay low at where it is. So what I've learned from that is that, you know, whatever that you hear from the market, from the news and whatnot, take it with a grain of salt to a certain degree, because you just don't know what's going to change. And the most important part is it's going to assess yourself and go, hey, if the rates does increase, is it still within my affordability range? And that's what we do. You know, again, you know, going back to the whole advice piece that we help our clients with, it's not just matching product, but also understanding that if the Reserve Bank were to increase the rates by 1, 2, 3%, is that going to fall outside of your realm of affordability? And that's important. You know, the reason why it's super important is because now, if you look back, say 12 months, when people are rolling out their fixed rate, which is another hot button topic, everybody's starting to panic because they see their repayments jumping 2, 3 times. And for the average borrower, they may not necessarily have the means to afford making those repayments, which is where it becomes, you know, they're in that sort of financial stress. Not a good place to be at. And we've dealt with clients that are in that position, but lucky enough, you know, we're able to kind of put together another strategy to kind of help kind of reduce the repayments for the short term, so that way we can weather out the storm until the rates start to kind of dip again.
Do you check in with your clients when you sort of start to see that happening, or wait for them to sort of come to you and go, is there something we can do here?
As soon as we go on board our clients, we provide what's called a post-settlement care, right? So what does that even mean? It means that going back to what I was saying, you know, we focus on creating that long-term relationship, working relationship with our clients, and post-settlement care is one of the initiatives that we rolled out. So at the anniversary of your settlements, the team was actually going to go negotiate the rate for our clients on their behalf, behind the scenes. And then fast forward another 12 months thereafter, we'll then conduct what's called a full home loan health check. So what that entails is to kind of look at, okay, Mr. Client, this is where your rates are, this is what your repayments are, this is what the market's doing at the moment. This is the financial incentive or financial benefit if you were to refinance. Then if we get the consent, the green light to go ahead, we then help facilitate the refinance as well. And then that cycle starts again.
Yeah.
The main reason why we do that, it's not only just to keep the clients happy in service, but I feel like that's the only way you can keep the clients stay ahead of the banks.
Yeah.
Because the banks are not going to come back to you and say, hey, look, you know what, there's a better rate out there, you know. And we were going through some of our client book and speaking to some of the clients as well. Those that haven't actually reviewed their loans for more than 2-3 years, more than likely you'll be paying a much higher interest rate. You know, and then by the time they come to us, we're helping negotiate, but we also provide them with options to see whether we can actually improve their financial position.
Amazing. And that's another benefit of engaging a broker.
Absolutely.
To make sure that they're getting the best level of service in the entire journey of the life cycle of their loan.
I mean, if you still kind of look at the statistics behind it, like mortgage brokers are now representing more than 70% of new lending. So that goes to show that, you know, the industry, there's definitely value in engaging in brokers, because again, it saves you time, and you know, it takes the guesswork out of finding the right home loan solution for yourself.
Absolutely. Well, we cannot thank you enough for coming and joining us here today.
Not a problem.
Is there any last questions, Kellyanne, that we have for Nick?
We're editing that.
Yeah.
I know it's 20 minutes, but we got a bit of time. What time is it, Alex? Huh? Okay, so we've got a bit of time. So what I want to know is, what is your experience as a broker?
It's quite a long story, so I'm going to give you the short version. Yeah. So my past life prior to becoming a broker was actually working as a financial planner. And I decided to kind of pivot and become a mortgage broker because I like the fact that I'm able to help people with their finances without charging a fee for it. Because in financial planning, in that space, it's usually fee for service. So once I stumble across mortgage broking, to me, it makes the perfect sense for me, where I can help clients and get the banks to pay me for it.
Can you still give financial advice?
Limited, so you
Yeah.
have to be scoped out or scoped into just debt advice only.
Yeah.
If there's one piece of advice you want a buyer to take away from this podcast, what would it be?
I would say find the right broker. I think that's pivotal with not only trying to protect your privacy, because again, if you go to 5 different brokers, you have to give all those 5 different brokers all your personal details. You know, finding the right person, the right fit would actually help you in the long term because it becomes more efficient when you're looking at building a property portfolio or just maintaining or reviewing your loans. And you know, you've built that level of trust. So for me, I believe that most brokers have what it takes, have the right technical skills and the right industry experience, but sometimes you also have to match your personality. You know, you may want a certain type of broker, which is why the only way you can do that is to speak to multiple brokers. You know, we actually encourage our clients that before you select us, have you actually spoken to a broker, another broker, or another lender, because that way you can get a sense of what you want as a borrower. And if we're still the right fit, then great. Then we can kind of build on that working relationship together. So that's the takeaway point. Just take your time, find the right person for you, just like hand in marriage, and then things will work out a lot better for you, for the borrowers or buyers.
Yeah, you probably know more about my finances than, my husband that is somewhere.
What happened? Are we dropping?
Oh, goodness.
It is essentially like a marriage. You really do get deep into someone's finance, and often people are uncomfortable with that. My next question would be, what does a buyer need to do ahead of time before meeting up with you?
They should actually just pick up the phone and call a broker straight away if you're already kind of thinking about buying a property. The reason being is that it's the brokers or the advisor's responsibility to take the first interview at the discovery phase, because to me, if you're a buyer, or first-time buyer in particular, you just don't know what you don't know.
It's true.
So how could you get someone to prepare for something that they don't even know? Which is why it's important to kind of pick up the phone, book a meeting, speak to a broker or an advisor. Then they can actually step you through of what needs to be done as next. And preparation is key, you know, because there's so many incentives out there, from first-home guarantee, first-home owner's grant, stamp duty exemptions, all that stuff, which is, to me, if you're not experienced enough or you never bought a property before, it's hard for you to navigate on your own. Hence why, you know, it's important to find the right person to actually kind of guide you through that. So again, circle back to answer your question, what do you really need to prepare? Not much, because there is nothing for you to prepare. You just need to speak to someone and they'll help you with the preparation of what you need to do prior to putting an application in.
Can I ask as well, because you know, a lot of the time buyers come to us when they've got their pre-approval in place, they've been looking at property, they might have missed out. We're sort of down the line in terms of the buying process. Do you encourage people that are looking to get into the market but might not necessarily know what they need to do, not just they've got a deposit or they think they've got enough of a deposit to be able to afford to buy a property, but they're starting to have the initial conversations with themselves, their friends, their family, going, we want to buy a property, but we don't know what we need to do to get there. Do you encourage people to speak to a broker at that point as well, to say, look, if this is effectively where you want to target in terms of purchase price, where you need to be sitting in terms of deposit saved, what your financial position needs to look like in order to get there?
Yeah, so this is this is actually part of the first conversation, which is the whole discovery conversation. The the way we assess any sort of situation, for example, if you're looking at buying a property, a lot of times, buyers don't know how much they can afford. They're like, well, I want to buy a property, but how much is the bank willing to lend me? For us, we try to kind of dive as deep as possible, go granular with what they're actually looking for. So, for example, we'll ask for things like, okay, well, how much deposit do you currently have? Are you expecting any sort of gifts, inheritance, etc.? So, in short, what is the total deposit that might be available to you at the time of application? From that point, I'll be then able to reverse engineer to work out, okay, well, based on this deposit, then based on what the lenders are prepared to lend you, after understanding your financial position, then we can work out what your ceiling looks like.
Yeah.
So, sorry?
No, I'm sorry. I was just saying yes. I was trying not to say it because I get in trouble every time I say yes.
Give me a wink, it's fine.
Okay.
Yeah, so I think that's actually very important because once we establish where the absolute walk-away price is for the buyer, for example, then we can then strategically with you guys be able to start to target areas that is within their buying zone. There's no point in going, hey, I can only afford to buy a $700,000 property, but you're looking at Vaucluse as an example, right? A house in Vaucluse. It just doesn't...
$500,000.
That's what I mean. So it just doesn't match up. It doesn't even make sense, And because we actually be able to kind of do that, it creates so much clarity and vision for the client to go, okay, well, this is what we're actually doing, But once we get the client to that place where they're not a target, then it becomes more effective for them. They're not wasting time looking at areas that just not inside their affordability range.
And then I think reversing that, I often get people come to me going, I don't think I'm in a financial position to be able to buy, or I'm not sure. And obviously we direct them towards you to say, well, speak to our preferred brokers and see if, maybe they can look at your situation and see if there is an opportunity there. And I guess it's around like that giving consumer confidence to people that are wanting to get into the market, because not everyone's situation is straightforward, and that, like for example with sole traders or business owners, their situation might be different, so allowing for them to have a different sort of loan structure than someone that's just relying on pay slips and things like that. Do you often get those people? And then are you good with, I guess, not just saying, oh, go away and come back to me when you have 20% deposit saved, but saying, well, let's look at your situation and then maybe there's an opportunity here?
A great question. And I think I like the questions because that's exactly what we do. We have a lot of clients that comes to us and say, hey, I just don't know where we're at financially. This is what we're looking at achieving. Now, if you were to come to me and give me a target of, I'm looking at buying $1 million property, if you're not quite there yet, because I understand your overall position well enough, we'd start to put little plans in place. For example, if we were to look at your living expenses and we need to achieve a certain amount of deposit for us to start the application process, then I'll be able to tell you and create a timeline for you and say, hey, Courtney, like, based on what I'm seeing at the moment and your propensity to save, you're probably about 6 months out. Now, if you want to actually accelerate that timeline, what sort of costs can we cut? Because in terms of the actual deposit, it's fixed based on the purchase price. So if I reverse engineer that, I can then create a plan for you to go, well, we need to increase our savings. If not, then our expectation is that you'll be buying ready or application ready in 8 months' time or 9 months' time. But again, by creating this sort of timeline gives people the incentive to actually start saving.
Yeah.
It's like to go, okay, actually, I got a plan in place now. Nick and Tim is helping me. And we check in on them periodically. How are we going? Are we there yet? Sometimes I might come back and say, hey, look, it was Christmas. I spent about too much during the Christmas period. Not a problem. Then we just have to push out the timeline. Yeah. So it's all about creating the right expectation and a structure for our clients to actually follow and understand how it all works. So to me, it's all about communicating and transparency. and be able to allow them to follow the right steps to be able to help them achieve their goals.
Yeah, fantastic.
Amazing. Thank you.
We're so grateful, and yeah, and if anyone's looking to buy a property and wants to speak to a fantastic broker, please give Rateseeker a call. Amazing. Thank you so much.
Amazing.
Ta.
That's a wrap. Clap, clap.